Hello, everyone, and welcome to a special SCOTONOMICS Live with my guest for this evening, Professor Richard Murphey. Hello, Richard. How are you doing?
I'm all right, thanks. How are you?
Yes, very well. Nice to see you. Thank you, everyone, for joining us. Please, the more questions you ask, the less questions I've got to ask, and I'm sure yours will be just as good, if not better, than mine. Richard, we're here specifically to talk about your new report, your Taxing Wealth Report 2024. And we're going to get into the details of this. It's a wonderful paper. There's a short summary. Also, there's an introduction, a short summary. There's a longer version of it. So really, I'd encourage everyone to have a look at it. It's the right size for everyone. I read the middle one, Richard. I hope that's okay. I'm sure there's much more detail.
Well, that was still 220 plus pages. So thank you. I mean, the full one is 440 pages, 126,000 words. I have to tell you, when I started, I never realized it would be quite such a monster. But you can read it in chunks. It's designed to be read in chunks. You don't have to read it all. And the way it's structured is that you can get a feel for each section and decide whether you want to go further or skip on. That's deliberate. It was meant to be written that way.
Yeah. Well, let's. I said I think it's fantastic. But who was your kind of target audience when you were thinking about this? Who did you write it for?
Rachel Reeves.
I thought so. Right. Moving on.
Let's go a little further than that, shall we?
Yeah.
Look,
yeah.
I mean, this is part of a 3-year project which Colin Hines and we worked together as Finance for the Future, which is not quite the same as Funding the Future, my blog. We've been funded by the Poldham Puckham Charitable Trust, which is, for those who know it, a Quaker trust, one of the less well-known Quaker trusts. But they gave us a grant to work on how you're going to pay for it, which is the question that every journalist asks of every politician, and let's also be honest, of every campaigner who wants to have some change in the society, that they have the temerity to bring to a studio, and the journalist then says, yeah, but how are you going to pay for it? And half the time, it's, if you're a politician, they mumble and say, well, only if the money's allows for it. And if you're a campaigner, well, we need to do it. What's the problem? That's not an adequate answer in either case, is basically what we say. Our aim over the last couple of years has been to prove that, first of all, there were tax reforms available. Secondly, that there was quantitative easing available in the case of emergency, and there were savings tax reforms that could be made. This report kind of pulls all that together. But I was really motivated to finally lift it from being a relatively short report, which is, in honesty, what Colin thought we were going to produce, to sort of the pretty big thing that turned that up, which took me overall around 9 months. I mean, not working every single day on it, but a hell of a lot of effort over 9 months to produce. And the intention really arose because I heard Lucy Powell MP, Labour's shadow leader of the House of Commons, I think she is now, say last summer, there is no money left, echoing Liam Byrne in 2010, who said that when Labour left office. And anybody who understands economics properly knows that that is utter nonsense. Even if you don't believe in modern monetary theory, you do know that the government creates money. You do know that it can always find it. In the case of war, there's never been a question about where's the money coming from. Mysteriously, that's always the bottom line of there's always cash to fight a war. There's just not always cash to relieve poverty. So we know that's true. And I was bored by this claim. And so I set out, and I guess I had 3 objectives. The first one was to prove, look, that this argument that there is no money left is wrong. And I proved that more convincingly than to myself, but I think to others as well. I just had literally before we've started live on this, a mail from a quite eminent professor. I won't name him. It's not fair. He doesn't know that I'm referring to him, but saying this is great and it really does make the case. And I'm pretty pleased by that. Secondly, I wanted to show that those with wealth in the UK are seriously undertaxed. When you take into consideration both their capital gains, which do, of course, improve their financial well-being, and their income. And they're taxed, roughly speaking, at half the rate of those on the lowest level of income in the UK, which is pretty staggering, and gives rise to an overall undertaxation a year, in my estimate, of £170 billion. And thirdly, that we could find some of that. And I've got to say, when I was set out to find some of it, I decided to make my life, I thought, a little simpler. So I decided not to go for alternative taxes, new taxes. Now, I love what Commonweal have just done in Scotland with regard to a land value tax. I'm not saying there's anything wrong with that. Craig and I know each other well. It's a good publication. Look at it. It's of merit. But I restricted myself to reforming existing taxes because I wanted to deal with a relatively limited time horizon to prove that we can deal with issues now. So I didn't introduce, didn't suggest a land value tax. I didn't suggest a wealth tax because even if one could be made to work, it would take a long time to introduce it. So I looked to reform existing taxes, rates, allowances, and reliefs within them to see what we could find. And that's the constraints I accepted. But I think the report has, at the level I set out to achieve, done its job.
Yeah. Fantastic. And I say that definitely, I think this is, as you said, a professor could look at this and get a lot from it. Hopefully a politician will, but really any campaigner or anyone who's interested in a better understanding of how the UK economy is structured in terms of tax could get something from this.
Well, I'm also quite encouraged that I'm told by some of my professional colleagues at universities, and not just my own by any means, that this is already being thought of as university teaching material.
Fantastic. Great.
Because it's challenging the status quo, and so few people do that in taxation. Yeah. That was one of the other reasons. There is another way of doing this stuff, and you're taught there isn't by the mainstream. And this says, yeah, there is.
Yeah. So before, again, I want to go into some detail, but I want to encourage everyone to read this, find the level that the most appropriate for them in terms of detail, and have a look at this. Spend either 20 minutes, a couple of hours, or however long you want to spend on it. But let's start with what's wrong with the tax system at the moment. What were the main reasons that you thought we can do things differently? Surely, we've got the highest amount of tax than we've ever had right now. This really high tax burden. People are paying loads of tax. Everyone's paying tax. Why do we need to pay? Why do we need to structure tax differently? Why do certain people have to pay more?
Well, look, first of all, I don't know that discussing the proportion of tax paid as a percentage of GDP is terribly relevant if the needs that society has require that the state fulfill those needs. So I'm quite happy that if we are short of services that only the state can effectively supply, we should have a high ratio of tax to GDP. And we are clearly short of some services that the state should be supplying right now because the NHS isn't working, education isn't working. There's good doubts about the judicial system. Defence needs more spending on it right now, according to quite a lot of people. I'll be writing an article on that for the National tomorrow. So there's lots of things that are not functioning as we would wish. So first of all, I don't quite accept the premise that that ratio is of such significance. But secondly, there are major flaws in the tax system. The first is that those on the lowest levels of income are overtaxed, and quite significantly so. This isn't income tax. This isn't even national insurance. It's things like council taxes, local taxes, the BBC licence fee, which is a tax. Let's be clear about it. VAT and excise duties on cigarettes, tobacco, and other things that people consume, and so on. So there's a lot of things wrong at the very lowest levels of income. And at the highest levels of income, the system is horribly biased in favor of those on high incomes and wealth. It's not just that we're talking about really artificial loopholes and things that it takes really clever lawyers to find, just that pension tax reliefs are double the rate for the wealthy of what they are for those 85% who pay basic rate income tax. And why is that fair? Why is it fair that capital gains tax is charged at half the rate of income tax? Why is the corporation tax rate so low? Why isn't there VAT charged on some things which only the wealthy consume, like school fees and financial services? So this massive bias in favor of wealth was the biggest problem I found. Now, I'm not necessarily, and can I be clear from the outset, I mean, the big number in this report, in a sense, is 92 billion. Now, inevitably, that number's approximate. It's the total amount of tax that I found, but it's inevitable that you'd never get precisely that. So take that number as being, the indication within a range. But also, let's be clear, nobody needs another 92 billion to actually fund the UK economy at present. So nobody would introduce all the measures I've suggested at one go, maybe ever. It was intended to be a range of choices that you might need if you need to find 20, 30, 40, 50 billion more, as clearly Labour does.
you could tick a few or four of these off, couldn't you, if you wanted to get those lower amounts?
Yeah, they're really easy to find, some of these numbers. And then, so that's an issue. But also, you could raise tax, not for these taxes, not for the purposes of actually spending more, but simply cutting the taxes on those on low income. In other words, you could use this as a positive program of redistribution. And I would say that's one of its potential greatest uses, because we do need a program of redistribution. We know at this moment that there are at least 1 million people in the UK as a whole, and so some in Scotland, pensioners living in deprivation. This isn't poverty. This has moved beyond poverty. This has moved into absolute need. There is no idea where the heating, where the food and everything else is coming from. And that's scandal in a modern country like ours. Absolute scandal. Just shouldn't be happening. And so I feel that we could do things about that. And, that's one of my particular targets. If I might give an example, one of the, just a hint of one of the bigger examples. I'm a higher rate taxpayer. Now, that's not a great shock, I hope, to most people, because university professors aren't badly paid. And I pro rata, I earn roughly what a university professor makes from my various sources of income. So I pay higher rate tax, 40%. If I now paid money into my pension, I basically have given up doing so because I'm actually already an old age pensioner. Rather bizarrely, I've just discovered that I've reached that glorious age where I can ask for such a thing. And if I paid money into a pension, I get 40% tax relief on my contribution, but 85% of the population don't. They get 20% tax relief. Why am I worth subsidizing more with regard to my personal savings and my accumulation of wealth, which is what a pension fund is, than somebody who's on lower income? Not only is that grossly unfair, but actually the cost of giving that tax relief to those on higher rate compared to the basic rate, which I think is the maximum anyone should enjoy, is £14.5 billion a year. Well, there are only 12.5 million old age pensioners in the UK. So divide those by each other and we could give every old age pensioner an increase of over 1,000 a year, even if we didn't need 14.5 billion for anything else. So we could immediately relieve some pensioner poverty if we change the rules about pension credit. And I haven't looked at the benefit system in this, but the rules on pension credit are really unfair at present. If we change those rules at the same time, we could target that money at those in real need and really boost their incomes and relieve their poverty. After all, they're being asked to live on massively less than the minimum wage now, which is over 20,000 in the UK at present. So why is that fair? So I'm really looking at creation of justice. This was another major motivation in everything I've done here, trying to create a fairer tax system.
I looked at this, and again, tell me if I picked up this wrong, but what it seemed for you, you were saying is, let's get a system where everyone, the richest in society, pay round about the same as the poorest people do in society. Let's kind of have a structure where, if you're poorer, you're not paying any more in tax than someone who's the wealthiest in society, and that if you work, you're paying, so your working person who's relatively poor is paying the same amount of tax as your wealthier person. Is that kind of where you wanted to start from, or did I not pick that up correctly?
Well, I had two basic concepts of fairness which run through the report. One is horizontal tax equity, i.e., whatever your source of income, you should pay the same rate of tax on it. And that doesn't happen right now. Why doesn't it happen? Largely because of national insurance above all else. If you earn all your money comes from work, you pay national insurance. And if all your money comes from rents and dividends and interest, you don't. Therefore, those who live off earnings from wealth actually pay much lower rates of tax than those who earn their income from working, which is completely bizarre. I mean, you don't have to be a Marxist to point out the complete madness of that arrangement. It's just obviously unfair. And loads of governments for a long time in the post-war period tried to do the exact reverse. So we don't have horizontal tax equity in the UK, and I'm trying to create that. And then I wanted to create vertical tax equity. Vertical tax equity simply means that as your income goes up, you pay more as a proportion of that income in total in tax. It's a progressive tax system, in other words. And we have the opposite at the moment. We have an overall regressive tax system. So, the approximation I got to was that, well, at least let's level the playing field in every direction. can. And bluntly, even then, if I'm honest, I haven't managed to do that with the recommendations I've made. I could go further. All I'm doing is, tilting towards leveling that playing field. I haven't got it right. And yet people are saying to me, I'm a terrible human being for asking for all this extra tax from those poor, wealthy people who pay so much already when they're actually undertaxed. I mean, it's quite crazy.
That's came across really strongly, that it's how we communicate this, that you might pay more tax, or you will pay more tax if you're wealthier. But if we're looking at this from what seems to be fair or just, it's almost impossible to argue against that when you look at what someone else is paying. And I think that's a really important point you said there, that it's from work. You working 40 hours, and let's say 10 hours of that is straight away going to pay tax. And there's nothing.
Probably more, by the way, Will. Probably more.
Yeah. And there's nothing you can do about that. Whereas if you're earning income from rent or from assets, then you're a lower tax, but you're also able to avoid that tax so much easier than that wealth tax. So there's huge issues there. We've already got a couple of comments, and I'll add this one here. So this is around there's an orthodox framing that we have to collect tax to spend it. And our audience, we've got quite a lot of MMTers who watch. So it's clear what you see in the report, but I'll let you address that. How do we get that taxes don't pay for government service? And what do you see in the report?
Look, there's a difficult tightrope to walk here. First of all, the politicians who I want to persuade to change their behavior do believe that tax pays for government spending. And if you try to move the whole agenda in one go, not just that you're wrong about believing that, but also you're wrong to think we can't raise more money, then you might face the risk of totally losing the argument altogether. So I had to find, if you set like a delicate balancing act, if you look at chapter 16 of the full report, you will find I go through all the way in which money flows through the economy. I explain everything about money having to be created before taxation can ever be paid, and that the flow is clearly spend and taxation. And I go through all that in detail, and those notes upon the nature of the national debt, the nature of money and taxation and the relationship between them and how the flow works, and indeed the diagrams that I produced on the way in which money flows around the economy, which actually took longer to create than almost anything else in the whole flipping report, because they were a real headache. And I hope they're useful. Those, I think, are a real contribution to debate around the fact that clearly MMT is right. But I explicitly didn't want to give an MMT lecture in this, because we all know that MMT is a red rag to a bull to some people. Oh, magic money tree, and therefore they don't read it. I didn't want to alienate that audience. On the other hand, I'm absolutely explicit about the fact that, of course, tax does not. Yeah, very clear throughout the report that tax, and really on the second page of the introduction, I say this, and I had a couple of editors say, take that out, you'll alienate people by saying what I put on the second page of the introduction. And I said, I can't, because it would undermine the credibility of the whole report in my eyes. So it's staying whether you like it or not. There was an argument about this. Now, the reality that we recognize is that clearly spend comes before tax. But let's also put this into a firm MMT context. MMT does not say you can spend money without limit, without consequence arising. If you think that, you've misunderstood MMT, is my opinion. Because that would assume that we're living in an economy so far from full employment and with so many underused resources that we can therefore spend money without limit on new resources that can be brought into production. And that does not exist. We do actually live in an economy which, if it's not at full employment, is at an effective plateau in employment at this point of time. And the process of transition of change, and change does take time, will have an effect. And if we try to throw too much money at the whole economy by spending, we will create inflation. Therefore, we will need tax to compensate for the inflationary consequence of spending more money on those things that we desire. So we need to take some resources out of use in the economy by charging tax, which is pure, again, MMT. MMT exists, or taxation exists in MMT, to actually deny resources to the private sector so the state sector can use them. And therefore, if we want the state sector to use more resources, we have to increase taxation. So this is pure MMT, this report, but it's not in the way that most people will write it. It certainly is not consistent with the way in which Bill Mitchell argues. And there are occasions, and Randy Ray and I have beaten around this, and Warren Mosler and I have beaten around this because, I know these guys. I don't talk to Bill very much. I admit I have a difficult relationship with Bill, and Bill has a difficult relationship with me. But with Randy and with Warren and with Stephanie Kelton and others, I have, I think, a reasonably good working relationship, or beyond that, in some cases, friendship. And, I don't think they dispute that what I'm saying is we're near full employment for all practical purposes. Therefore, if we're really going to seriously increase spending, we will have to increase taxation to remove the risk of inflation. It's not a chance that the word inflation appears over 250 times in The Deficit Myth by Stephanie Kelton. So that's why I'm saying this. But it is still spending causes the need for taxation, or redistribution causes the need for taxation. But it isn't that we are taxing to enable us to spend.
Yeah, great. And I think it's worth, so I hope that's answered your question there. I picked that up, and I know where you're coming from, and the person mentions your tweets, and I completely know where you're coming from. And I know Stephanie Kelton said she very rarely, when she's having a conversation with anyone, says that taxes don't pay for government spending. She deliberately sets that aside, I think, for similar issues that you've raised. Yeah. And she said, if someone mentions it, I'm happy to go there, but it's just not something I use when I'm talking about MMT. So I think there's certainly an MMT perspective of something that doesn't seem like particularly MMT. We're going to get into another question. Before,
can I just go back to that point? I mean, Stephanie and I do talk or comment to each other quite often. And I think, she is a very pragmatic presenter of these ideas. And she's clearly there not just to present an academic idea. And I think it's fair to say that Randy and Warren are probably more interested in that sort of approach, and so is Bill Mitchell. But Stephanie is definitely a different place, that she's trying to affect real change. And certainly I am. And I think what you're trying to do with SCOTONOMICS is trying to affect real change. And I think in that sense, we've got to be realistic about the fact that we can't convince all the people all the time of what we're doing, but we've got to frame the arguments we do make in a way that's consistent with what we genuinely understand, but actually not bother to raise this argument too often, because we still want to change the world in a practical, on the ground way. And that requires us to sometimes duck this rather difficult issue, which would otherwise distract from that goal.
Great. Okay, we've got one question, and then we'll go into a wee bit more of the where does the money, how are you finding the money? And this is from Charles, who said, so I think it's a very practical use of kind of tax. Could tax be used to discourage activists from hostile takeovers that end up just hollowing out the company with the debt paid to shareholders? Maybe thinking about kind of Thames Water, that type of company kind of engagement there. I think. What's your thoughts, Richard?
This isn't an issue I did actually address in the report. I mean, there came a point where
governance, isn't it?
Sorry?
It's more kind of corporate governance, isn't it?
Well, no, it isn't. It is definitely a real issue. And I mean, somebody who's done a lot of work around this is Prem Sikka, now Lord Prem Sikka. Prem is very sure that we should be restricting very heavily the amount of tax relief that should be available on corporate debt interest payments, for precisely the reason that we're talking about here. I have quite a lot of sympathy with that. After all, there is no tax relief on the payment of dividends to shareholders in a company, but there is tax relief on the payment of interest to a debt holder. So first of all, you bias the company towards debt holding, and that increases the risk inside the company at cost to the creditors, which is unfair because it increases literally the moral hazard implicit in the use of corporate structures. And secondly, obviously encourages lading of debt. And that does favor the corporate raider. So that would be an argument. I haven't taken it here. I felt it was a more complex argument than I wish to take on at this level. But the report does end with a section saying other issues to address, and this would certainly fall into that category. But frankly, quite a number of more complicated things fell into that category because I needed to leave them there.
Yeah, fantastic.
I am going to have to ask you, I'm afraid to say, I'm going to have to ask you if I can take a break, because somebody clearly needs to talk to me. Can I just literally have 90 seconds? I don't know what this is about, but I'll be back. Is that okay?
Yep, no problem. and we'll remove Richard from screen, but he's still there. I can kind of see him in the background. Charles, thanks very much for that question. KG, I don't know. I think you're maybe someone on Twitter, but I'm not sure just with those initials. Yeah, I think Richard's response around MMT was very pragmatic. And I think that, you know, we're certainly taking a different approach where we're not shying away from that conversation that the government spending is not from raising taxes. But I completely understand why Richard wouldn't be doing that with this report, and I said why Stephanie Kelton and other people might take a different approach. But I feel it's really important to address that head on. I think that's one of the strengths of MMT. We're not going to shy away from that, but you really need to choose your audience, I think, to detail those. We've got, we'll hopefully have Richard for another 15, 20 minutes. I want him to go through kind of some of the details of the taxes that he's suggesting we find to give you a bit better understanding, and he's back.
Yeah, sorry. We have some building work starting next week on the house, and a critical question needed an answer. I'm sorry.
Okay, fantastic. So what I mean, I know you've got a chart. I think it's in the summary. It's really good. It's like 35 or 36 areas I think that you cover. But could you give us some of these highlights? So you mentioned this 97 billion. Where does this come from? Could you give us, you know, as best as you can, kind of like what's the biggest down to the kind of lowest amounts that we'll be looking to find?
Yeah, look, I mean, let's just talk about the big numbers. There are quite a number of small numbers, and I think it's important to recognize that there are some changes that are necessary to be fair, which do have small numbers, but we'll miss those out from this list. I've already mentioned the one about restricting tax relief on pension contributions to basic rate, which raises 14.5 billion. Let's also talk about national insurance because it is so important. There are a number of significant changes required there. One is to simply charge national insurance on all earned income, however much it is above the basic of 12,500 a year, which is national insurance free. But at the moment, it actually stops at £50,000 a year, and you fall to 2% from the current rate of 8%. So those who are on wealth actually pay less national insurance than those who are on lower levels of income proportionately. Obviously, they could pay more, absolutely, but less proportionately. Well, that one could, I think, if I remember rightly, that could raise 12 billion a year. I'd probably downscale that one a bit now because since I actually even wrote that estimate, of course, Jeremy Hunt has cut the rate, so maybe call it 10 billion. But another one about national insurance, which is much bigger, and this is an idea because I've been around tax for quite a while now. Like I started training in the 1970s. And so I've known a lot of changes. And we used to have a thing called an investment income surcharge. Now, it's an income tax charge to compensate for the fact that there is no national insurance on investment income. Capital gains, rents, dividends, interest, and so on. Now, obviously not on every penny of that, you'd, for pragmatic reasons, clearly allow a certain amount of investment income a year on which you didn't apply an investment income surcharge. I suggested 5,000 a year. You've got to have a fair number of assets to have £5,000 of investment income arising a year. Yeah, but let's be blunt, that would require to have well over £100,000 of investment. And that doesn't, you know, that's not to be sniffed at. So if we charged a national insurance equivalent investment income surcharge at 15%. Now, why 15% when national insurance is now at 18%? Because national insurance is actually paid in two parts, part by the employee and part by the employer, which together come to 21% at the moment, 21.2%, then 15% is sort of a compromise. That could raise £18 billion a year. That single change. Now, it doesn't have to.
That is one of the biggest, isn't it?
That's one of the biggest. And now you don't have to charge at 15%. You could charge at 10% and you'd still get 12 billion. But you know, there are options available here. One of the ones that I think is quite important is to actually align the rate of tax paid on capital gains with the rate paid on income tax. I don't see why capital gains should be charged at half the rate of income tax. It just doesn't make any sense to me at all. I think it's unfair. And this is the one which actually, when I talk to people, is most annoys people. If we did align those two rates, then we would get 12 billion a year. I have suggested that we should pay capital gains tax on the eventual sale of our homes. Now, this is a complicated area, and I floated this idea. This is one of the more contentious ones in the report, and this would be on death. In other words, on the final use of a person or in a spousal relationship, whether marriage, civil partnership, whatever else, on the second death, when somebody no longer has use for a property, you would pay capital gains tax on their history of property ownership over their life. So you would compare the value on death with the cost of the properties they're bought, having allowed for purchases and sales over life, and pay capital gains tax on that. Now, actually, most of us don't buy or sell more than about 6 or 7 properties at most, many fewer than that. And it's normally pretty easy to track. And if it isn't, it's pretty easy to approximate this anyway. I'll give you an example. The first flat I bought was in 1983. It cost £28,000, and it's in South London, and it's now worth nearly £500,000. And you could say, if I'd stayed in the same flat forever, on death, I would have paid capital gains tax on the £500,000 less than £28,000. Well, I believe that would be fair. Only on death. It does not therefore stop people moving during life. It doesn't prevent people actually, necessarily moving to follow work and so on. But that, the first instance, would raise at least 10 billion a year, I reckon, and that number would go up over time.
And a little bit, what happens now, Richard, with that? Let's using that example. So there's nothing. It's free. It's free. Okay. Yeah.
No, what does happen is that it could fall into an inheritance tax charge if your estate did. But remember, only around 1 in 20 estates are subject to inheritance tax. And this specific change to charging tax on the final sale of houses would force more properties back into the market, would reduce the incentive for people to hold on to them and pass on properties between generations, and therefore concentrate property ownership, and would therefore make for greater equity in the property owning market, which is the other real purpose for introducing it. It's to say, let's distribute this household wealth away from what is an increasingly concentrated number of people who pass on from one generation to the next, with those who have not got houses being excluded altogether. So let's do that. Another one, which I think is quite important, charging VAT on financial services. I mean, they're exempt from financial services, from VAT at present. Here we're talking about things like, investment advice, pension advice, things like that. That could raise 8.7 billion a year. And the vast majority of these services are, of course, consumed by the wealthy, because unsurprisingly, those on lower incomes don't buy financial advice. This figure does allow for the fact that we already have a tax on insurance services, and I've allowed for that in my calculations, and everybody pays that already. So that's a big one.
So we do pay VAT on services. So this is, it's just that we don't pay VAT on all services, and this is a service that we definitely could add VAT to.
Yeah. Absolutely. A couple of things we could do around corporation tax. One is we could simply find out which companies owe tax, which sounds really bizarre, because why can't you find out which companies owe tax? Well, the revenue seems quite unable to do so. I actually did a video on this morning. Over 2 million companies a year, we have no idea what they do. They don't file corporation tax returns. They aren't asked what they do. They may or may not file accounts. And the revenue reckons that over 30% of small company taxation in the UK is not paid. They reckon over 30% is not paid. I think it could be higher than that, by the way.
Something in here, Richard. I opened a company in Spain, and it cost me about €1,500, and it took about 6 weeks. And I had to get an accountant. I had to have money in the bank. I think we had to put like €1,000 in the bank. We had to get an official, like a gastor here, someone whose job it is to sign, and they had to look through all the forms and check everything before we'd be given our certificate for having a company in Spain. Now, the absolute opposite of that is what we have in the United Kingdom, where it's like 12 quid in 24 hours and you can set up a company. Now, at some point,
you can do it in less than 24 hours. You don't even have to physically sign a form in the UK. You can do it all electronically. I mean, literally no proof of identity, nothing. It's like a money launderer's dream. And these are being used for criminal activity. I've no doubt at all. And I think there's a vast amount of money to be collected there. So that could be done. We could also actually, if we did track down the companies which don't pay and made the directors personally liable, I reckon we could pick up another £6 billion. And we could also look at transforming the rates of tax paid by companies, because historically there was at least a 10% difference in the tax rate paid by smaller companies. That's for those who make, at the moment, this is a bizarre definition, but it's less than 325,000 a profit a year, which makes no sense at all. Don't worry about why that's the case. It's just defined by the level of profit, not by the actual size of the company. But they traditionally have always had a lower rate of tax, and there's a good reason for that. It's because they, by and large, have to pay a lot more money to borrow, whereas large companies paid a higher rate of tax because they tend to be able to borrow very cheaply. But that differential is, at the moment, only 6%. Increasing that would raise 7 billion. You can see that the numbers are now totting up, and there's quite a lot more that we could do. There are some which didn't raise any money at all. Council tax reform raised precisely nothing whatsoever. My inheritance tax reforms were reasonably successful, but in bits. So inheritance tax doesn't raise a lot of money. So inevitably, by only tinkering with it, which is what my drive was, I mean, in total, I can only raise 6 billion out of that. But some useful ones by getting rid of stupid reliefs that there's no proven need for. These things could all be done pretty straightforwardly by any chancellor. They could go through, in many cases, through a finance bill pretty quickly. They would be relatively easy to negotiate because of their fairness. Very hard at the end of the day to actually really argue with, because they are inherently fair in most cases. So the political capital expended to bring them in would be quite low, and that's a factor in what I've argued, which is why I've tended to move away from a wealth tax, where we know the political capital required to make change is very high, and that's really the bias inside what I've got. But I mean, lots and lots of potential money. Just reforming HM revenue and customs, investing money in the community. Now, I've actually recommended some of my reforms, by the way, are negative in the sense they're spending without obvious benefit, because I didn't want to double count benefits. But one of the things I've recommended is spending £1 billion more on HM revenue and customs, so it reopens its tax offices in the communities of the whole of the UK. I mean, it's pretty darn crazy that if you're in Lerwick now, your nearest tax office is in either Glasgow or Edinburgh. That's not exactly next door.
No.
I mean, there should be an office in the Shetlands. There should be an office in the Orkneys. There should be an office quite probably in the Western Isles somewhere. There should be an office, or at least somewhere on that coast where somebody can go to get advice. There should be offices in Inverness, and onwards and onwards. And yet there aren't, and they've been shut down. And I believe that tax is the consideration in the social contract. We ask people to pay in this relationship between government and people. But in that case, not only do you have to be seen to be present in the community that you're asking to pay tax, which would have the benefit, of course, you know who the crooks and cheats are, and therefore you could recover more, but you also have to be seen to help those who want to pay properly. And right now, the tax office is failing miserably to help people who want to pay properly. It doesn't even answer the phone. So actually having a presence back again would, to me, be really important. So this is not just we can raise money. This is also about making it easier to pay the right amount of tax.
Yeah, so it's an overall kind of reform of the whole tax system.
Yeah, the mentality of tax is what I'm addressing as well. The tax actually isn't a bad thing. We need it because we have to cancel the consequences of that government spending we all need, going back to the MMT point, which I hope is going to work.
Right. Okay, fantastic. So a really good question. I was just about to ask that, KG. So what's been the response so far from the report from government officials? And I'm going to ask you that in kind of a few levels: UK, devolved nations, and maybe kind of anyone else who you've had feedback from.
Government officials, absolutely zero. I've had no response from any official body. I've had no response from the Labour Party. I've had no response from the Tories, but then I didn't expect one. I have had a little discussion with some in the SNP, but I'm not willing to name names because I think that's always unfair. I've had discussion with a couple of other parties who have representation in the House of Commons. both of whom are quite interested. The SNP hasn't shown a great deal of enthusiasm at present. I think they think this is a UK issue. I think that's a big mistake on their part, by the way, because I think, and you mentioned sorry?
So I'd like to get into that to finish that.
Okay, well, let's move on to that in a minute. Have there been good responses elsewhere? Look, The Guardian really ran a big article on it. They ran an editorial on it. That was really useful. There's been quite a lot of reaction from, well, people like podcasts. People want to talk about it. There's been quite a lot of useful feedback inside the profession. So I've done one for an accounting website today, and that seems to be pretty popular. There's some awareness. I mean, it was interesting. I was being interviewed by an accounting profession website and podcasting site today, one of the biggest. And they were saying, well, look, all seems inherently fair, Richard. There's nothing really much we can take objection to here. And I thought, well, yeah, that's actually, I call that a measure of success. Yeah. That's what I meant it to be. It is inherently fair. It's all very reasonable. There are some people who are telling me, of course, I'm an outright communist, Marxist, blah, blah, blah. Well, they don't know what a communist, they don't know what a Marxist is. And they've clearly got the wrong guy by labeling me, because, I mean, I sure as hell know what Marx said. I mean, you can't really do my job and not have read some Marx. But I'm not a Marxist. So bad luck. Wrong target, wrong person. But can I put this in context? The report is likely to have a slow, long burn. Yeah. I wrote something called Country by Country Reporting in 2003. It was a proposal for the reform of international taxation so that we could identify large companies who were operating in tax havens. It took 12 years to make that an OECD recommendation and 14 years to make it UK law. It's now the law in 80 countries around the world. These things take time. You're trying to change a culture and you put them out there and then you talk about it on events like this. And I put out TikToks and tweets and blog posts and I write articles for newspapers and I repeat it and I go to meetings and I say, well, you could do this. I've written about it here. And those things are a slow program of trying to get the ideas into the ether. So the whole idea here of challenging the idea that there is no money left is a massive task because most people believe there is no money left. We've got to persuade them. So we're changing the whole narrative of UK political debate. Let's not underestimate what this is trying to do. And yet I have had some really positive feedback. Perhaps the best one was Comment is Free in The Guardian, where I'm not always universally popular. And I've written for Comment is Free for 20 years, I guess. There was almost no negative commentary about this reporting, under the line comments in Comment is Free. Massive degrees of interest, support, and welcome. And we're talking about thousands of comments there. So that was really, really indicative of the reaction to this. I felt, okay, a soft left audience, but not necessarily always sympathetic to the things I say about tax. But here, really very, very positive indeed. So I like that.
Brilliant. Yeah, I agree with you completely. The idea that this would just land and someone would say, this sounds great, let's do that. We'll have this, and this, only in an ideal world. I said, I'd love to, please do, I'll put a link in the comments, but please do look at this report. It is wonderful. And I think it is one that you can just have and say to people, just look, because there is a much better way that we can do tax if we're going to move to an independent Scotland. Before we get there, actually, what's been you said that it's a mistake for the SNP to think this is only UK. Could you just give us a couple of minutes on what you think's particular or specific to the Scottish Government in this report?
Well, there's two levels that this is important at. One is that it should be used as a basis for arguing for an improved devolution settlement. Because the way the devolution settlement has worked has meant that the SNP has control over any government, Holyrood. Let's be clear, not just the SNP, any government has control over a very little bit of the tax system for which they can basically be slagged off with ease because it's very hard to make any real change just by using the very limited levers that they have been given. They do need control over taxation of wealth. They do need to be given control over taxation of income from wealth, which is what I've given, for example. They do need to be given more control over taxation on inheritance and other areas. VAT is completely outside their control as well. So there's an argument to say there should be literally more control of tax and that this devolution settlement should actually be much better for Scotland, for Wales, for Northern Ireland, the north of England, and maybe other regions within the UK as well. There needs to be a greater degree of confidence from the centre in the discretion to create tax systems that suit the different parts of the UK. So that's inside the current constitutional settlement. I think it provides an argument for reform of settlements. But I think there's another level which this is important. I wrote about this a little while ago in the National. I believe that the SNP makes a mistake by not engaging in the UK national debate on tax, because by engaging in the UK national debate and saying how it would transform the UK tax system, it will give the clearest indication to the people of Scotland that it understands the issues that will affect Scotland as an independent country. Therefore, it gives the clear indication that it would be committed to tax fairness throughout an independent Scotland. And I think that, don't get me wrong, I don't live in Scotland. I know I don't live in Scotland, and I may talk to a rarefied selection of Scots, and I'm aware of that risk. Some of you perhaps are on this podcast tonight. But the people I speak to give me the very clear impression that Scotland has a very different attitude towards tax and to social fairness. And the SNP, I feel, should actually be engaging in this national debate, even though it has very little chance of affecting change, to give the clearest indication of what it would do if it ran the government for the country of Scotland as an independent entity. This is rather like a shadow government opportunity. Put forward shadow programs for running a country as if you're in charge, because you believe you could do it. And I think that's really important for Scotland and the SNP to do. Create policy as if you were an independent country, even though you're not. Because if people don't believe you could run an independent country, they won't necessarily vote for it to become an independent country. And this is a program that an independent Scotland could put in place to transform the tax system that it would inevitably inherit from the UK, just as Ireland in 1922 inherited its tax system from the UK at that time. So, it will not be possible to start the Scottish tax system from scratch. It will have to be, and I've discussed this at length over years with various people, some of whom undoubtedly you know of, about how we could do that transition. And it would take 2 or 3 years to design the transition. But this is a program for change to the UK tax system to make a fair Scottish tax system. Why not embrace it, talk about it, and say what elements you like of it? Because that will persuade people in Scotland it's going to be better if we leave. And what is more, they're going to raise enough money to actually deal with the problems that we face.
Fantastic. Right, okay. 3 points on that. First one is you do sound like a Marxist, similar to the Marxist Martin Wolf, who this week in the FT said that there has to be effectively a rearranged, devolved settlement, so that these types of decisions are made much closer to regional capitals and centres. So yeah, you're as Marxist as Martin Wolf, Richard.
Yeah, right. Martin and I do know each other, not well. I've never identified the Marxist element in him, I have to admit.
Yeah, so what you're saying is not really radical, I suppose, is what I'm saying. And the second element is that when the Scottish, the perspective for Scottish independence is that the Scottish government will grandfather all the tax regulation in the UK. So within the Sustainable Growth Commission, there wasn't so much detail in the latest perspective, but it basically said we will start after the transition period with the same position that we inherit at the start of the transition period in terms of tax and corporate governance. So this is the kind of situation. Yeah, this is a situation I think that we're up against. I do think that the government, this particular administration, don't really want to put their neck on the line and say how things will be different. And my final point is, you're going to be speaking for us at an event in December, which talks about how a new tax system for Scotland could be planned, and it's almost going to, I would imagine, not want to write your presentation, but it's just basically going to say, I've done all the hard work here, explain it, and this is what you need to back, and this is what you need to have available for when you do become independent. So I think you've done a huge bit of work that we can take as an independence movement and look and say, this is something that's different, this is something that's got a lot of weight behind it and a lot of merit and framed in the the way that we want to frame an independent Scotland being just and fair. So I think it's a hugely useful bit of work you've done for Scotland, and I do hope that we get much more engagement from the current government, or maybe even a future administration, when they're looking at this report.
Thank you. I mean, I would add there that I did actually I've done a couple of white papers on that transition period in tax. The one I'd recommend was, I'm picking my own work here, but with the one I did for Commonweal, I did a white paper for them in 2017 or 18, probably that long ago. Now, I would make some changes to that now because the world's moved on a bit since then, inevitably, and my own thinking has developed. But I talked about the massive changes in the culture about the management of taxation, grandfathering in the existing system, and the ghastly bias within the UK as a whole system towards A, wealth, and B, privilege, which is inherent in the way in which the tax system is managed by the great and good. We saw that with Labour appointing some really weirdly inappropriate people to be on its new tax advisory panel. A former senior partner of Deloitte International Accountants. Look, they sell tax planning advice. A former boss of HM Revenue and Customs, who's never going to recommend reform. Margaret Hodge, who, pretty contentious politician, but also knows remarkably little about tax. And I advised Margaret on tax in detail, including in her well-known parliamentary hearings. I was there to help her get through those hearings. So, I mean, I really do know what Margaret does and doesn't know about tax. But they're all really not people who actually know the nitty-gritty and how to get on with it. Instead, they carry privilege before them. And that isn't what we need. We need actually people who will change the tax system of Scotland in the interest of the people of Scotland. And that requires people who understand how the tax system of Scotland works on the ground and in the community and in the business world, and for pensioners and for the self-employed and for the unemployed and for those on benefits and everyone else, and how these all interact. To do that, why are you asking a former senior partner of an international firm of accountants about any of those things? I doubt if he even knows how to do his own tax return, because he probably pays someone else to do it. Blunt. He earns so much. Why would he do his own tax return? He'll pay somebody. And therefore, this really is inappropriate to get advice from people who really do not know the nitty-gritty of reality of life. The SNP, again, has to prove that it's with real people.
Yeah. I think I would agree wholeheartedly there, and I'm sure our audience would agree with those sentiments as well. Again, Richard, thank you so much for doing this work. We are going to make sure we amplify this as much as we can, and hopefully we'll help get this in front of a few more academics in Scotland, and also policymakers when we do our Scotland 2030 event, and a build up to that at the end of the year. Thank you very much as ever for joining us. Thanks for your questions and your comments this evening. I'll see you all next week, and Richard, hopefully I'll see you soon.
Thanks a lot. Cheerio. Bye. Thanks for asking me.
Bye for now.